What if I told you that the secret to becoming a disciplined, consistent trader isn't in mastering complex strategies or waking up at 4 a.m. or memorizing every economic indicator, but in making one tiny shift each day? A 1% improvement. That's it. Imagine that. No dramatic transformations, no major overhauls. Just small, daily habits that stack until they redefine your identity, your edge, and your P&L. This is the core message James Clear drives home in Atomic Habits. And for traders, it couldn't be more critical. In trading, small changes don't just add up, they compound. Every single trade you take, every journal entry you make, every moment you resist the urge to chase price, that's a habit forming. You're literally becoming someone, one decision at a time. Clear starts by confronting the illusion of radical change. You've probably told yourself, starting next week, I'll be more disciplined. But discipline doesn't start next week. It starts with your next trade. The problem is, you're likely measuring success based on outcomes, green or red days, when in reality, the real change begins with small wins that seem invisible at first. Success is the product of daily habits, not once-in-a-lifetime transformations. Now, picture your trading like an ice cube sitting on a table in a freezing room. You're slowly increasing the temperature, 25 degrees, 26, 27, still no movement. But then you hit 32 degrees, and suddenly the ice begins to melt. The breakthrough wasn't random. It was the result of all the previous work, silent, unseen effort, building pressure. In trading, this is the moment your edge finally starts to show up in your equity curve, the moment when your habits begin to pay off. Clear calls this the plateau of latent potential, and most traders quit before they reach it. You might start journaling for a week and then stop, or follow your plan for 3 days, only to abandon it after one losing streak. Why? Because you expected results too soon. You didn't understand that every action was compounding, even if it looked like nothing was changing. This is where the trap lies. As a trader, your feedback loop is noisy. You can make a perfect trade and still lose money. You can break all your rules and end the day green. So your brain looks at your results and says, this new habit doesn't work. But in truth, the process is working. You just haven't seen the reward yet. If you want to change your trajectory, start by detaching your identity from your daily P&L and connecting it to your process. Let's compare this with Mark Douglas, who in Trading in the Zone insists that consistency is a function of your mindset, not your method. James Clear gives you the system for building that mindset. Douglas tells you to become process-oriented. Clear shows you how to make that process stick, even when motivation fades. Start small. Want to review your trades each night? Don't commit to a 3-hour breakdown. Just commit to opening your journal and writing one sentence. That's your habit. Want to avoid revenge trading? Don't focus on stopping it altogether. Focus on pausing for 30 seconds before every re-entry. That pause is your wedge. These tiny actions, when repeated, form systems. And systems goals. Goals are the results you want. Systems are the processes that lead to those results. Most traders obsess over hitting $1,000 a day or doubling their account in 6 months. But those are outputs. The inputs, the real leverage, lie in the habits you execute every single session. So what does this mean for you practically? It means that the difference between a trader who makes it and one who doesn't isn't knowledge. It's execution, it's behavior, and behavior is driven by habit, by showing up, repeating small wins, and building systems that don't depend on willpower. You don't need to be more disciplined. You need better defaults. When your trading process becomes your autopilot, you won't need to force good decisions. They'll be inevitable. You won't be fighting yourself every morning. You'll be gliding into a rhythm you designed in advance. One powerful takeaway is the 2-minute rule. Clear says, when you start a new habit, it should take less than 2 minutes to do. So apply this to trading. Want to become the kind of trader who always logs their trades? Start by just opening your trading journal after the close. That's it. You're not committing to a 1,000-word reflection. You're just showing up. And in showing up, you're casting a vote for the type of trader you want to become. Not every action will transform you, but every action is a vote. Eventually, your identity begins to shift. You stop being the person who tries to be disciplined and become the person who is disciplined. From Brett Steenbarger to Jared Tendler, every trading psychologist talks about repetition, process, and identity. What Clear does is codify that into something mechanical. You don't need motivation. You need a system that survives your worst days. Start today. Start small. Open your charts and identify just one bad habit. Set a 2-minute countermeasure against it, then repeat. That's the atomic way. That's how traders win. You're not trying to force better results. You're trying to become the kind of trader who naturally produces better results. That's the difference between outcome-based and identity-based change. And if you're still obsessing over hitting a certain profit target each month, you're missing the deeper transformation that drives every winning trader, becoming the person who deserves those results. James Clear says it best. True behavior change is identity change. This means you stop asking, how can I be more disciplined? And start asking, what would a consistently profitable trader do right now? Then you do that, even if the results aren't immediate. Let's put it into trading terms. If you want to be a trader who never violates their stop loss, you don't wait until the stop is hit to prove your discipline. You build an identity by cutting the trade at your predefined risk, even when it hurts. Each time you honor your stop, you're not just making a good decision, you're reinforcing the identity of a disciplined operator. Clear explains that every habit you build reinforces a version of yourself. It's like brushing a single stroke on a canvas. On its own, it's nothing. But stroke by stroke, habit by habit, you're painting the picture of who you are as a trader. You're not just creating a routine. You're casting votes for the kind of trader you want to become. And this is where most traders go wrong. You define yourself by your results. I'm in a drawdown, so I must be a bad trader. I had a green month, so I've got this figured out. But the market doesn't care about your labels, and neither should you. Focus instead on proving to yourself that you are the type of trader who follows process, who honors risk, who shows up even on hard days. Because once that identity is locked in, the results will follow. Let's compare this with Jared Tendler's work on performance psychology. Tendler focuses on mapping emotional patterns to performance issues. He'd tell you that failure to cut losses consistently is often not a technical problem, it's an identity problem. You don't see yourself as the kind of person who does that, so you hesitate. But if you adopt Clear's identity-first approach, you change that core belief, and the hesitation disappears. Let's take a practical example. Say you've been struggling with overtrading. Your instinct is to slap on a new rule. I'll only take 3 trades per day. That's an outcome-level intervention. But ask instead, what kind of trader am I becoming? If you say, I am the kind of trader who waits for high-quality setups, then every time you pass on a mediocre setup, you're reinforcing that identity. James Clear offers a simple framework. 1. Decide the type of person you want to be. 2. Prove it to yourself with small wins. Let's say your identity goal is to be a calm, rules-based trader. Great. What's a small win that proves that identity? Maybe it's pausing for 10 seconds before every trade and asking, does this fit my system? That moment of pause becomes the habit that shapes the new identity. This is not some motivational fluff. It's cognitive programming. The more you reinforce a belief with action, the more it becomes reality. And in the markets, your belief about who you are will determine what you allow yourself to do. If you still believe deep down that you're a reckless gambler, you will sabotage yourself the moment you get ahead. But if you begin to identify as a professional risk manager, your actions will start to reflect that, even under pressure. Compare this with Steve Ward's work in Trader Mind. Ward talks about identity congruence in performance. He argues that stress and poor performance come from acting in ways that are misaligned with your self-image. Clear simply gives you the behavioral roadmap to fix that. Small, repeatable actions that nudge your identity in the right direction. This identity-level approach also gives you resilience. Because if your identity is wrapped up in being right, every losing trade is a threat. But if your identity is built around being disciplined, then a loss is just part of the job. You show up, you execute your plan, you move on. You're not emotionally hijacked because the trade didn't validate your ego. It's just data. And let's be honest, most traders lose not because they lack a good strategy, but because they don't have the emotional identity to execute it. You break your rules because the identity isn't yet stable. That's why we see so many traders succeed in sim mode and fail in real money. It's not about market conditions, it's about identity pressure. So where do you begin? You start by writing this down. I am a trader who fill in the blank with what matters most, follows their plan, honors risk, waits patiently. Then each day look for ways to prove that belief through action. And here's the most powerful part. You don't need to be perfect. You just need to vote for that identity more often than not. It's not about flawless discipline. It's about trending in the right direction. In time, your habits won't feel like effort. They'll feel like who you are. You won't resist the urge to chase. You'll simply ignore it because it's not something you do. You'll stop revenge trading not through willpower, but because it doesn't align with your identity. That's how deep this goes. In trading, consistency is the only real edge. But consistency is the byproduct of identity. You don't perform consistently because you try harder. You perform consistently because you are consistent. So stop trying to fix your trading with more rules. Fix it by becoming the kind of trader who doesn't need to be told what to do. And that journey starts with one identity-based habit today. You might think you're making conscious decisions when you trade, but in reality, most of what you do, especially the things you regret, happen on autopilot. That impulse to jump into a setup too early, that hesitation to exit a loser, those are habits, and every one of them follows a structure. Cue, craving, response, reward. James Clear calls this the four-step habit loop, and if you've ever acted on emotion in the market, you've run through all four steps without even realizing it. Let's break it down. You see a green candle spike. Craving. You feel the urge, I don't want to miss this. Response, you mark it buy. Reward, you get a quick win or dopamine rush. Even if it's a loser, the habit loop gets reinforced. Sound familiar? This isn't just psychology. It's a neural loop that repeats every time you react to stimuli without conscious intention. The market presents endless cues, and your brain, trained to seek reward, craves action. If you're not aware of the loop, you're enslaved by it. Now, this is where Clear's brilliance applies directly to traders. You can't eliminate the craving, but you can rewire the response. You can't stop the market from baiting you with signals, but you can create habits that override impulsive reactions. Most bad trades don't come from a lack of knowledge. They come from a triggered response loop. You see price moving, your heart rate spikes, and before your brain catches up, your finger's on the button. That's not strategy. That's conditioning. Think about it like this. The market is one massive feedback machine. Every trade you take reinforces something. The question is, what are you reinforcing? Are you building the muscle of patience? Or are you feeding the cycle of impulse? James Clear explains that to break a bad habit, you must first make the cue invisible or irrelevant. In trading, that might mean removing your P&L from view, or disabling hotkeys that enable snap decisions. If your environment is a minefield of cues, your habits will always be reactive. And to build a good habit, you need to make the cue obvious, the craving attractive, the response easy, and the reward satisfying. That's the four-part system Clear outlines to re-engineer any behavior. Here's how this could look for a trader trying to follow a trading journal routine. Cue. End of trading session, set an alarm. Craving. The desire to feel accomplished or clear-headed. Response. Open your journal and write a quick summary of the day. Reward. Check off a visual tracker or log the entry to a performance sheet. Over time, this habit loop becomes a self-sustaining circuit. The reward isn't just the dopamine hit, it's the shift in identity. You become the trader who always reviews their performance. This is where the parallels with Mark Douglas become sharp. Douglas talks about the subconscious beliefs that govern trading behavior. What Clear adds is a practical framework to reprogram those beliefs through repetition and structure. You don't need to do deep internal therapy. You need to catch the loop and redirect it. Let's take another common trader loop. FOMO trades. Price breaks out fast. Craving. You fear missing the move. Response. You chase the breakout without confirmation. Reward. Maybe you win. More often, you lose. But either way, the rush reinforces the behavior. To break this, interrupt the loop. You could insert a rule. If price breaks out, I must wait for one pullback before entry. That adds friction to the response stage. Or you could add a visual trigger, like a sticky note saying, wait for setup on your monitor. That's inserting a conscious pause into an otherwise automatic pattern. Clear explains that awareness is the first step. You must name the loop before you can change it. This is why journaling is so effective, not for analysis, but for pattern recognition. When you write, I chased again, you're mapping the habit loop. And once it's mapped, it can be rewired. This is why Brett Steenbarger emphasizes self-monitoring so much in his work. You can't change behavior you don't observe, and Clear gives you the blueprint. Start by breaking the habit into the 4 parts. Name the cue, identify the craving, notice the automatic response. Then, redesign the system to change the outcome. Traders who win long-term are not those who avoid emotion. They are those who structure their behavior to survive emotion. The market doesn't reward heroes, it rewards systems. Let's make this concrete. Suppose you overtrade after a loss. Cue, you take a losing trade. Craving, you feel frustration and the urge to get it back. Response, you increase size or re-enter impulsively. Reward, you feel temporary relief or regain confidence, even if the trade is irrational. This is revenge trading, and to kill it, you need to cut it at the cue or replace the response. You could create a post-loss protocol. After a loss, step away for 5 minutes. That becomes the new response. If you can make that pause satisfying, say, log it and check it off as a win, you shift the entire loop. You rewire the brain to crave calm, not chaos. James Clear reminds us that you do not rise to the level of your goals, you fall to the level of your systems. In trading, your system isn't just your strategy, it's your behavior, your triggers, your reactions. That's your real edge. So today, identify one trading habit loop that's costing you. Break it into its 4 parts. Ask yourself, what is the cue? What do I crave? What do I do? And what reward keeps it alive? Then change the loop. Insert friction. Add a pause. Replace the reaction and repeat. This is the real game you're playing, not against the market, but against your own conditioning. Look around your trading setup. Every tab you have open, every notification you leave unmuted, every chart layout, those are signals, cues, invisible architects of your decisions. You think you have willpower, but the truth is, your environment is always stronger than your intentions. As James Clear puts it, you do not rise to the level of your goals, you fall to the level of your systems. And systems live inside your environment. In trading, your environment isn't just your desk. It's the entire world that surrounds you the moment you sit down to execute. The layout of your screen, the noise in your room, the P&L flashing in your peripheral vision, the Twitter tab that's one click away. Every one of these elements is either helping or hurting your execution. Want to stop overtrading? Rearranging your environment might be more effective than rewriting your rules. Clear calls this concept environment design. It's the deliberate act of shaping your surroundings so that the desired behavior becomes automatic and the undesired behavior becomes impossible. For traders, this is gold. Let's take a cue from Mike Bellafiore, author of One Good Trade. He talks about creating a playbook of setups and sticking to them religiously. But what happens when your screen is cluttered with tickers that don't match your playbook? What happens when Discord is blowing up with trades you didn't plan for? The answer? Your environment is setting you up to fail. Clear emphasizes that behavior change starts not with more discipline, but with fewer obstacles. If the only chart visible on your screen is your A+ setup, you're less likely to deviate. If your P&L is hidden by default, you're more likely to focus on process, not outcome. If your workspace is minimalist and quiet, you're less likely to chase dopamine in chaotic markets. So how do you apply this? Start with subtraction. What doesn't need to be there? Remove it. Kill your profit-loss display mid-session. Close social media while trading. Use screen layouts that emphasize setup criteria, not noise. Set your journal or checklist as your home tab, not your broker. These small changes seem cosmetic, but they trigger different behaviors. Why? Because you're shaping the cue stage of every habit loop. Remember the habit loop from before? Cue, craving, response, reward. Environment design manipulates the cue. If the cue doesn't appear, the craving doesn't trigger, the response doesn't follow, and the habit dies. You can't always stop a bad habit with willpower, but you can make the cue invisible. That's power. Here's an example. Let's say you keep overtrading after 11:30 a.m., when the market slows and setups degrade. Instead of saying, I'll try harder to stop, build an environmental off-ramp. Close your charts at 11:30. Have a macro that logs you out, or physically walk away and relocate to a different space. Change the setting, and the behavior changes. James Clear also talks about priming your environment for success. That means making the good behavior the path of least resistance. You want journaling to stick? Have your journal auto-launch when your session ends. Want to prep better before the open? Keep your checklist taped to your monitor. When the desired action is easy to start, it becomes inevitable. Compare this with Mark Douglas, who emphasized mental discipline and emotional neutrality. But Douglas's ideas often assume you can operate well under pressure. Clear's approach is more proactive. Remove the pressure before it arrives. Don't fight temptation. Make temptation hard to reach. Think of elite athletes. They don't just rely on discipline. Their whole world is engineered around performance, what they eat, where they sleep, who they train with. Traders are no different. If your trading station is chaos, your results will be chaos. So ask yourself, what does your workspace say about you? Is it built for focus or distraction? Is your layout clean or cluttered? Are your systems easy to access or buried under noise? Every click, every pop-up, every distraction is a tax on your decision-making. And trading is already a high-stress, fast-response profession. The last thing you need is a system that adds friction when you're trying to stay composed. James Clear recommends something powerful. Make the cue obvious for good habits and invisible for bad ones. So here's a practical drill. Do an audit of your trading environment. List every cue you experience from the moment you sit down. Be honest. Is your monitor flashing tickers you won't trade? Is your browser showing your P&L? Is Slack pinging you about trades you didn't plan for? Now start eliminating, one by one. Replace with clean cues that promote focus, a visible rules list, a risk summary, a chart layout that only shows watch list names. Then take it one step further. Design your physical environment to reinforce your identity. Remember part 2? Identity drives behavior. So if you want to be the trader who's focused and calm, your setup should reflect that. Dim lighting, clean desk, zero distractions. Even small rituals, like lighting a candle or sitting in a specific posture, can prime your brain for a certain mode. Over time, these environmental cues become signals. I'm entering trading mode. I follow rules here. I execute with discipline here. This is what elite performance looks like. Not forcing willpower, but removing resistance. Not controlling everything, but designing what you can. Clear reminds us that we are products of our environment more than we'd like to admit. But the good news is you can change your environment, and when you do, your results follow. Make your trading environment a reflection of your best self, not a trap set by your worst impulses. Start now. Clean up. Simplify. Design for discipline. Your trading will thank you. You think discipline is about grinding harder, about pushing through resistance. But what if discipline isn't something you fight for, but something you design for? What if, instead of trying to force yourself to do the right thing, you just made the right thing the easiest thing to do? This is the shift James Clear brings with his laws of habit formation. Specifically, make it obvious. Make it easy. If you're struggling to stick to your trade checklist, or to take only high-quality setups, or to journal daily, your problem isn't motivation. It's friction. Your good habits are too hard to execute, and your bad habits are too easy. Traders often overestimate the role of willpower. You start your day fired up. Today, I won't chase. Today, I'll follow my plan. But 2 hours in, the market moves, your emotions spike, and that morning declaration dissolves. Why? Because your systems weren't easy enough to follow under pressure. James Clear's rule is simple. If a behavior is hard, you'll abandon it. But if it's easy, effortless even, you'll repeat it. And repetition is everything. Take your pre-market checklist. Is it buried in a spreadsheet or printed out and taped to your monitor? Do you have to click through 4 tabs to review your trade rules? Or are they embedded into your trading platform as pop-ups before entry? Every second of friction matters. And now ask yourself, is reviewing your trades a chore? If it is, you'll avoid it, even subconsciously. You'll find yourself distracted or skipping steps. But what if journaling was so streamlined that it only took 2 minutes? What if all you had to do was rate your trade 1 to 5 and write one sentence? You'd do it, not because you're more motivated, but because it's easier. This is why Clear tells us, reduce the number of steps between you and the behavior you want. Let's take another example, limiting your trading to only your playbook setups. Most traders try to do this with willpower. But what if you built a hotkey system where your trading platform literally blocked any ticker not on your pre-approved list? That's not mental strength. That's smart design. This is the principle behind implementation intention, a term from behavior psychology that Clear loves. It means planning exactly when and where you'll execute a habit. For traders, this could look like, after I place a trade, I'll immediately log it in my journal. At 3:30 p.m., I'll review my executions and note one thing I did well. If I feel FOMO rising, I'll step away from the desk for 2 minutes. These aren't vague intentions. They're precise scripts that lower activation energy. They make the behavior obvious and easy. Compare this to the mental models in Brett Steenbarger's work. He talks about mental rehearsal and performance priming. But the question is, how do you make that sustainable? Clear gives the answer, by building frictionless systems that eliminate the need for decision-making in real time. Remember, you're trying to automate excellence. You already do this with bad habits. Think about how easy it is to act impulsively in the markets. You see a green candle, you click, you enter. One cue, one button, and you're in a trade you didn't plan for. That's what effortless bad habits look like. What if your good habits were just as effortless? James Clear tells the story of the British cycling team, who achieved massive success by focusing not on massive changes, but on marginal gains. They improved the seat cushions, the hand sanitizer, the pillows. Every 1% gain compounded. As a trader, your edge lives in those 1% changes. What if your risk management tool was auto-launched every session? What if your A-plus setups lit up green and everything else dimmed out? What if a trade timer popped up after every fill to make you pause and reflect? These aren't fantasy tools. They're examples of environment-driven habit design. They make execution easy, and when execution is easy, consistency follows. Let's bring this back to the principle. Make good habits obvious and easy. Here are 5 quick strategies to implement today. 1. Stack your habits. Attach a new habit to an existing one. After I close my platform, I'll write 3 lines in my journal. 2. Reduce steps. One-click access to rules, auto-generated trade logs, templates for journaling. 3. Use visual cues, checklists on your screen, colored buttons for different trade types, a sticky note that says follow your system. 4. Automate wherever possible, scripts that pre-fill journal entries, alerts that prevent entries outside your criteria. 5. Shrink the behavior. If you can't journal 10 trades, start by journaling 1. If you can't review for 30 minutes, start with 3. This isn't about perfection, it's about progress through design. James Clear writes, habits are the compound interest of self-improvement, so make that interest easy to earn. Remove resistance, build momentum, automate the right behaviors. And remember this, you are not lazy. You are not inconsistent. You are likely just trying to do the right things in the wrong environment. Fix that, and everything changes. Every time you break your rules, it starts the same way, with a trigger, a flicker of emotion, a tempting thought, a cue you didn't see coming. And in an instant, your mind rationalizes a trade that shouldn't exist. That's not a lack of knowledge. It's a habit that hasn't been interrupted. James Clear doesn't just teach you how to build good habits. He teaches you how to break bad ones. The key? Make them invisible. Make them unattractive. Make them hard. Make them unsatisfying. As a trader, your bad habits are stealthy. Revenge trading, FOMO, overtrading, they don't announce themselves. They whisper. They start with just one more, or this one feels right. You know better, but the cue has already triggered the craving, and now you're riding an emotional wave with no exit plan. To break the loop, you don't need more self-control. You need less exposure. Step 1, make the cue invisible. This is environment design in reverse. You remove the triggers before they activate the craving. Do you revenge trade after watching your P&L? Then turn off your live P&L during market hours. Do you FOMO trade after seeing other traders post wins on social media? Log out of those platforms until your session ends. Do you jump into subpar setups because of too many charts open? Remove tickers, not on your A+ list. Your impulse doesn't need a challenge, it needs an obstacle. Make the bad habit harder to start. James Clear explains it's easier to avoid temptation than to resist it. Traders often pride themselves on resisting urges, but elite performance comes not from resistance, it comes from never seeing the cue in the first place. Now let's move to step 2. Make the craving unattractive. This is about mindset. You've likely conditioned yourself to associate bad habits with relief. Revenge trading feels like taking back control. Overtrading feels like staying productive, but it's a lie. These actions only deepen the damage. So you flip the narrative. Every time you catch yourself wanting to overtrade, remind yourself, this is how I blow consistency. Every time you want to chase a breakout, this is how I train myself to be impulsive. Attach pain to the habit, not pleasure. Clear calls this reframing the association. The craving becomes less desirable when you see it for what it is, sabotage. Let's bring in Jared Tendler's concept of emotional leaks. He teaches that unresolved emotions from previous trades leak into your current behavior. James Clear gives you a tool to close the leak, disrupt the cue, and change the reward. Step 3. Make the response difficult. This is behavioral friction. If a habit is hard to do, you're less likely to do it. Want to stop impulsively increasing size mid-trade? Lock it behind a manual approval pop-up. Want to avoid re-entering too soon? Build in a 5-minute timer after any exit. Want to stop revenge trading? Use a spreadsheet log that you must fill before you're allowed to enter again. Add friction. Make the habit a pain, and it will fade. Step 4. Make the reward unsatisfying. This is accountability. Bad habits persist because they offer a reward, real or imagined. The rush, the illusion of taking action. But what if you rewired the reward system? James Clear suggests using habit contracts or accountability systems. In trading, this could mean telling a trading buddy, if I revenge trade this week, I owe you $100. Logging every broken rule in red in your journal, where you'll see it daily. Posting a public commitment. 3 days, 0 impulsive trades. Hold me to it. The moment a bad habit is tied to public consequences or to a visible pattern of failure, it stops feeling good. Let's compare this with Mark Douglas's ideas. He emphasized that traders must accept risk completely to trade without fear. But how do you create that mental state? Clear gives you the behavior protocol. Eliminate bad habits before they trigger, so risk feels clean, not emotional. Here's a powerful drill to implement right now. 1. List your top 3 destructive trading habits. Be brutally honest. 2. For each one, answer the 4 laws in reverse. How can I make the cue invisible? How can I make the craving unattractive? How can I make the response difficult? How can I make the reward unsatisfying? Let's do this with an example. Overtrading in choppy conditions. Cue. Market is open. Nothing's moving well. Make invisible. Don't look at charts after 2 failed setups. Step away. Craving. Want to feel in control again. Make unattractive. Write a post-it that says, overtrading equals emotional tax. Response. Taking more trades out of boredom. Make difficult. Turn off hotkeys. Create a checklist to fill before trade entry. Reward. Feel like you're doing something. Make unsatisfying. Track each unnecessary trade with a public commitment to stop. This works because it breaks the chain. And once the chain is broken enough times, the habit dies. James Clear makes one thing crystal clear. Bad habits don't stop with guilt. They stop with systematic design. And the most dangerous bad habits in trading? They're the ones you justify. Just one more trade. I'll size up because I feel confident. This setup isn't perfect, but I've got a gut feeling. These are excuses in disguise, and every time you act on them, you vote for the wrong trader. Instead, vote differently. Create friction, remove temptation, break the loop. Over time, the desire fades, not because you're stronger, but because your environment is smarter. You are what you repeat. So stop repeating sabotage and start designing for success. You want consistency, not just one green day or one disciplined week. You want sustained, reliable execution over months and years. But here's the truth that most traders never confront. Consistency is not about intensity. It's not about pushing harder or being more motivated. It's about repetition. Quiet, structured, deliberate repetition. Because in trading, excellence isn't a performance, it's a pattern. James Clear makes this clear. You do not rise to the level of your goals. You fall to the level of your systems. And the only way systems survive is through tracking, through logging, measuring, and reinforcing the behaviors that define your edge. It's not exciting. It's not sexy, but it's the foundation of every trader who's ever built long-term success. The problem is, most traders are tracking the wrong things. You're focused on results, daily P&L, win rate, R multiple. But those are lagging indicators. They tell you what already happened. You can't control them directly, and when you chase them, you usually sabotage your own progress. What you need are leading indicators, inputs, habits, actions you can control. Things like, did I follow my pre-market routine? Did I stick to only A-plus setups? Did I journal each trade immediately after execution? Did I obey my max loss rule? Did I walk away when conditions weren't in my favor? These are behaviors, habits, and habits tracked consistently are the clearest window into whether you're becoming the trader you want to be. Clear introduces the concept of habit tracking for this exact reason. When you track a habit, you give it weight. You make it visible. It's no longer a nice to do. It's a commitment you can measure. And the act of checking the box becomes its own kind of reward. That little X on your spreadsheet, that's your win for the day. This is especially powerful in trading because you can do everything right and still lose money. That's the game. But if your only feedback system is profit, you'll feel like a failure, even when you're leveling up. That's why tracking process matters more than tracking outcomes. You're not trying to be profitable every day. You're trying to be consistent every day. Because consistency is the soil in which profitability grows. And here's what Clear knows. The best way to stay consistent is to never miss twice. He says, missing once is an accident. Missing twice is the start of a new habit. So if you break a rule today, that's okay. Forgive it, log it. But if you break it again tomorrow, you're already building the wrong momentum. Tracking stops that spiral. It keeps you honest. It brings visibility to your decisions. When you see a red mark under no revenge trades for 3 days in a row, you don't need a trading coach to tell you you're slipping. You feel it. You own it. And that awareness is the first step to course correcting. Let's compare this with Brett Steenbarger, who talks about using journaling as a feedback loop for performance growth. What Clear does is simplify the process. Don't just write, measure. Don't just reflect, record. Turn insight into data. Make the intangible visible. You can set this up today. A simple spreadsheet. Columns for your key behaviors. Rows for each trading day. Mark each habit with A or SAC. After 2 weeks, patterns emerge. After a month, trends become undeniable. Your system is no longer just something you hope to follow. It's something you can see. You'll start to notice something strange and powerful. Tracking your habits builds discipline automatically. You don't want to break the chain. You don't want to see a red SAC. That small visual becomes your internal scorecard. And it starts to matter more than the P&L. Clear says, every action you take is a vote for the type of person you wish to become. When you track your habits, you're voting over and over for the identity of a calm, focused, disciplined trader. And let's not forget the deeper effect. Tracking creates momentum. When you've followed your system for 14 straight days, you don't want to break that streak. That momentum builds confidence. And confidence in trading is everything. Not the kind of false confidence that comes from one green day, but the grounded confidence that comes from knowing, I show up, I execute, I follow through. Here's the real test. Can you do the boring things every day when no one is watching and when you're not being rewarded yet? That's where most traders fall apart. They stop journaling because it's not doing anything. They skip their review because they already know what went wrong. They cut corners because today's just one session. But habits aren't built on occasional effort. They're built on relentless repetition. So what's the system? 1. Identify your top 3 of 5 trading behaviors. These are the habits that, if repeated, lead to long-term success. 2. Build a simple tracker, a whiteboard, a journal, a spreadsheet, whatever you'll actually use. 3. Track daily. Win or lose, log your actions. Don't wait. Do it while it's fresh. 4. Review weekly. Look for slips, patterns, breakthroughs. Adjust. 5. Celebrate streaks. Let the process be its own reward. This isn't optional. This is the edge. You don't need more trades. You need more tracking. You don't need more motivation. You need more measurement. Because what you measure, you improve, and what you repeat, you become. The best traders are trackers, not of price, of behavior. That's where the real trend lives. You've been doing the work, journaling, following your checklist, taking only the best setups, but your equity curve doesn't reflect it yet. And this is the breaking point for most traders. You start to think, maybe I'm wasting my time. Maybe I'm not improving at all. That's the exact moment when people quit, not because they're failing, but because they don't realize how close they are to breaking through. James Clear calls this the Plateau of Latent Potential. It's the silent zone where habits are compounding, but results haven't surfaced. Imagine ice in a room slowly warming from 25 degrees Fahrenheit to 32 degrees Fahrenheit. The temperature is rising, but nothing seems to change until that final degree. Then suddenly, the ice begins to melt. That's the tipping point. And in trading, your habits often simmer below the surface before any visible transformation occurs. This is the most dangerous zone in a trader's journey. The period where discipline is improving, but the P&L isn't cooperating. You start doubting the process. You question the system. You feel the urge to change strategies, change timeframes, change everything. But that's when you need to hold the line. Clear writes, all big things come from small beginnings. The seed of every habit is a single tiny decision. But seeds take time to sprout. If you dig them up too soon, you never get to see the growth. Think about it this way. Each time you honor your stop loss, even when it hurts, you're creating a deeper groove in your brain. Each time you wait for confirmation before entering a setup, you're reinforcing patience. These aren't wasted reps, they're deposits in the compound interest account of behavior. The interest just hasn't hit your account yet. Compare this to Mark Douglas, who insists that consistency is a mental skill built through repetition, not outcome. He teaches traders to disconnect their identity from the result of any single trade. James Clear adds the deeper insight. Systems work below the surface before results go above it. That's why most traders are stuck in what Clear calls the valley of disappointment. It's the painful zone where expectations rise faster than reality. You think, I've followed my rules for 2 weeks. Why am I still stuck? But that thought reveals the problem. You're expecting the payoff too soon. You're underestimating the lag between habit and breakthrough. This is where resilience becomes your edge, not in grinding harder, but in trusting longer. Clear reminds us, the most powerful outcomes are delayed. And that delay is what filters out the undisciplined, the impatient, the reactive. If you can survive the delay, you become part of the 1% who endure long enough to let the edge compound. So how do you survive it? First, measure the right things. Stop obsessing over daily P&L. Start tracking process metrics. How many trades matched your setup criteria? How many times you executed your routine? These are leading indicators of success. Second, zoom out. Look at your progress over months, not days. Think in seasons, not sessions. If you're journaling more than last quarter, if your emotional control is higher than 3 months ago, you're winning. That's the real scoreboard. Third, celebrate invisible wins. No revenge trades today? That's a massive win, even if you're red. Stuck to your stop on a choppy day? Another win. These micro victories don't show up on the balance sheet, but they build the trader who will generate those future profits. Clear emphasizes that progress is nonlinear. Most people expect a straight line, but real change looks like a slow burn followed by a sudden spark. The trick is staying in the fire long enough to feel the heat. This principle is also reflected in Brett Steenbarger's work on talent development. He talks about the adaptive learning curve, where skill improvement comes in waves, not steps. You plateau, then suddenly leap forward. But that leap only happens because you kept showing up through the plateau. That's why daily repetition matters more than dramatic breakthroughs. You don't need a 10-hour winner to change your life. You need 10 days of rule-based execution. That's how you earn the next level. Let's make this practical. When you're stuck in the plateau, do this. Review your execution, not your outcome. Highlight every action that aligned with your identity. Track your habits visually. Watch the streak build. Set a minimum baseline you always hit, no matter what, e.g., open journal, take a screenshot, tag each trade. Read your own notes from when you were undisciplined. Remind yourself how far you've come. You may not be where you want to be, but you're no longer where you were. That's progress. Clear tells us, forget about goals. Focus on systems. Because goals are binary. You hit or miss. Systems are continuous. They keep you improving, even in the silence, even in the dark, even in the plateau. So if you feel stuck, remember this. The ice is melting. You just can't see the water yet. Keep showing up. Keep casting votes. One day soon, you'll look back and realize the breakthrough was happening all along. You just had to trust it before it was visible. You've been taught to obsess over goals. $1,000 days, 80% win rate, 6 figures in a year. But what if those goals are actually hurting your growth? What if the pressure to hit the number is exactly what keeps sabotaging your consistency? James Clear draws a hard line. Goals are not what drive success. Systems are. And in trading, this hits deep. Because most traders don't fail from lack of ambition. They fail because they measure success in outcomes they can't control and ignore the processes they can. Let's break this down. A goal is a result, an outcome. A system is a set of behaviors. Goals say, I want to double my account. Systems say, I will follow my trade checklist every session. One is a wish. The other is a repeatable path. Clear explains the downside of goals in 4 critical ways, and each one speaks directly to trading. First, goals reduce your happiness to a finish line. You tell yourself, once I'm consistently profitable, I'll feel confident. But what happens when that milestone moves? When your profitable month isn't enough? You tie your identity to a future state and make the present a failure. Second, goals create a winner or loser mentality. You either hit your profit target or you didn't. You either made your 2R trade or you failed. But trading isn't binary. It's probabilistic. You can follow every rule and still take a loss. Does that make you a loser? Only if you're measuring the wrong thing. Third, goals are at odds with long-term progress. Once you hit a goal, the motivation often dies. You were disciplined to reach 10K, and now that you're there, you loosen up. But systems have no finish line. They evolve. They sustain you. They keep you improving long after the initial high fades. Fourth, goals can restrict your focus. If your goal is to make $500 per day, you might push trades that don't belong. You might break your rules to make the number. Suddenly, the goal corrupts the system. The target becomes the trap. This is where Clear makes his boldest point. Fix the inputs and the outputs take care of themselves. In trading, this means you stop tracking only P&L and start measuring. How many A-plus setups did you take? How many times did you follow your stop loss without hesitation? Did you pre-plan every trade? Did you avoid emotional re-entries? Did you log and review each trade post-session? These are systems, and systems can be repeated regardless of market conditions, regardless of daily outcome. Let's tie this to Mark Douglas, who urges traders to think in probabilities. He teaches that each trade is just one event in a large sample size. Clear gives you the operating system to stay consistent long enough to let those probabilities work. And now, think about your own trading journey. How many times have you jumped systems after a few red days? How many times have you quit journaling because it didn't seem to help? That's the goal trap. You were focused on quick results, not long-term behavior. But if you had kept journaling for 90 days straight, without judgment, your execution would have shifted. This is where Brett Steenbarger echoes the same truth. Development trumps outcome. He writes that the best traders treat each day as practice, not a performance. Clear agrees. Systems are practice. Systems are what you do when no one is watching, when the P&L is hidden, when the scoreboard is off. So how do you build trading systems that endure? Start by identifying behaviors that define your edge. Then build a process around repeating them effortlessly. For example, System 1. Every morning, write down your trading thesis for the top 3 tickers. Before each trade, pause and rate the setup quality 1 to 5. System 3. After each exit, write 2 lines in your journal. What worked? What didn't? System 4. If you break a rule, log it immediately. Then review your rule break journal weekly. None of this is exciting, but that's the point. Clear writes, you should be far more concerned with your current trajectory than with your current results. Because trajectory predicts destination. And systems define trajectory. Here's a truth most traders won't admit. The real edge isn't in your strategy. It's in your ability to execute that strategy without fail, over and over, through boredom, through emotion, through uncertainty. That's what systems protect you from. They're not rigid, they're resilient. Let's say your strategy is sound. You've backtested it. You've proven it works in simulation. But in real time under pressure, you deviate. You overtrade. You skip entries. You size up recklessly. That's not a strategy issue. That's a system failure. Clear insists that systems must be designed for real life, not ideal circumstances. You won't always be motivated. You won't always feel focused. So your systems must function on autopilot. That's where habit design, tracking, and simplification come in. Remember, goals might inspire you, but systems carry you. So instead of asking, what's my monthly target, ask, what habits must I repeat this week to become the trader I want to be? Instead of chasing milestones, chase mastery. Track the actions that build consistency. Celebrate streaks of behavior, not just bursts of profit. And when the market gets tough, when nothing's working, fall back on your system. Let it carry you through the drawdowns. Let it anchor your identity when self-doubt creeps in. The scoreboard will catch up. Your equity curve will reflect the process. But only if you stop worshiping outcomes and start honoring behavior. Forget goals. Build systems. Trust them. Execute them. Let them make you bulletproof. You've made progress. You've learned how habits form, how to stack them, how to break the ones that destroy your trading edge. But here's the final and most important truth. Success in trading doesn't come from who's the smartest or who has the best system. It comes from who can stay in the game the longest. And staying in the game means learning how to stick with it forever. James Clear closes his book with a deep insight most traders overlook. Habits don't just need to start strong, they need to endure. Because temporary consistency doesn't create transformation. Long-term, sustainable behavior does. And for traders, that's everything. Your edge is useless if you can't execute it over months, quarters, and years. Your psychology collapses without structure. Your capital disappears if your habits erode. So how do you make the right behaviors stick for good? Clear teaches the importance of making habits satisfying. That's the final key to long-term sustainability. You need to feel rewarded immediately after doing the right thing. Not weeks later, not after the profit rolls in. Now, in trading, this is a challenge. Many good trades end in losses. Many bad trades make money. The feedback loop is corrupted, so you have to manually engineer satisfaction. Every time you stick to your stop loss, even if it's painful, log it and celebrate. Every time you skip a mediocre setup, mark it as a win. Every day you follow your process from open to close, highlight it in your tracker. You need to feel successful just for doing what you said you would do. That feeling is what keeps the habit alive. This is why tracking matters so much. When you see a streak build, 10 days of no impulsive trades, 15 sessions of full journal compliance, it becomes addictive. You don't want to break it. And that commitment becomes your new default. But there's more. To stick with a habit forever, you also need to embrace boredom. Clear puts it bluntly. The greatest threat to success is not failure, but boredom. And traders are especially vulnerable. The market is exciting. The chaos is addictive. But good trading, it's boring. It's routine. It's repetitive. Most traders fall off, not because the work is too hard, but because it's not exciting enough. They crave novelty. They start tweaking strategies, jumping into new indicators, chasing faster trades. Not because they need to, but because they're bored. Clear warns, professionals stick to the schedule. Amateurs let life get in the way. The elite trader doesn't seek excitement. They seek consistency. And that requires showing up, doing the boring work, day after day, regardless of motivation. Let's connect this with Mark Douglas, who said that consistent profitability is rooted in mental neutrality. To be neutral, you need emotional stability. And nothing builds that stability like boring, repeatable systems. But how do you keep showing up when the motivation fades? Clear introduces the idea of identity reinforcement through habit evolution. As you become more experienced, your habits must evolve with you. This keeps them fresh, but still grounded in structure. So if journaling feels stale, add a new layer. Track your emotional state pre- and post-trade. If your review routine feels repetitive, start tagging setups visually and collecting screenshots. You're not overhauling your system, you're upgrading it. You're keeping the habit alive through evolution. And there's another powerful tool, accountability. Clear suggests creating a system where someone else sees your behavior. For traders, this could mean sending your weekly trade journal to a mentor, logging your rule breaks in a shared spreadsheet, joining a group where habits, not just trades, are reviewed. When others can see your process, you feel a higher standard. Not for ego, but for identity. You become the kind of trader who operates with transparency. Let's revisit Jared Tendler. His work shows that emotional stability comes from pattern recognition and repetition. Clear builds on that with habit structure. Repetition becomes easy when the process is rewarding, visible, and identity-driven. Here's the final truth. Motivation fades. Discipline wavers. But identity holds. When your trading habits become part of who you are, you don't need to force them anymore. You are the trader who journals. You are the one who doesn't overtrade. You don't follow your rules because you should. You follow them because it's who you are. That's the real goal. Not to grind harder, not to build willpower, but to become the kind of trader who wins by default because the behaviors are built into your operating system. So here's how you stick with it forever. Make the habits satisfying. Celebrate process, not just outcome. Build visual tracking systems. Let momentum carry you. Accept the boredom. The best trading is often the most uneventful. Evolve your habits to match your growth. Keep it fresh. Create accountability. Let your habits be seen. Reinforce identity. Every repetition is a vote for who you are. Clear ends his book with a powerful idea. Your outcomes are a lagging measure of your habits. You don't need to predict the future. You need to predict your behavior and then repeat it forever. You don't need a perfect system. You need a sustainable one. And you're not trying to win every trade. You're trying to be the kind of trader who keeps showing up, disciplined, focused, neutral. That's the edge that never fades. Word count? You've now seen how Atomic Habits by James Clear unlocks the behavioral blueprint for long-term trading success. You learned that tiny changes, done consistently, create seismic shifts, that your identity as a trader is shaped not by what you want, but by what you repeat, that every habit follows a loop, and when you understand it, you can rewire it, that systems beat goals, that repetition trumps intensity, and that the boring work is what separates the elite from the emotional. In trading, you don't control the market, but you do control your habits, your process, your discipline, your mental game. This book hands you the tools to take back control, one habit at a time. So what now? Go back to part 2, identity-based habits, and ask yourself, who do I want to become? Start there. Build the habits that prove it. Track your process. Cut your bad loops. Make your system satisfying, and never stop evolving. If this breakdown helped you shift perspective, like, comment, and subscribe for more deep dives into the psychology behind trading mastery. Your next level is waiting, and it's built one habit at a time.